Welcome back to another exciting class. This is the second part of income tax, and we're going to look at two more questions just to be able to get to understand the process of taxation, and hoping that we're going to get some depth understanding of the same. So we have example 1 here. This is a question from the KCSE that was done in the year 2018, and the question reads that the table below shows a monthly tax rate for a certain year, just there. Then the question says that in a certain year, a monthly personal relief of Kenya shillings 1,280 was allowed. In a certain month, sailors earn a monthly basic salary of Kenya shillings 2,000. It has an allowance of 7,800 and a commuter allowance of 5,000 shillings. So you have to calculate number 1A, part 1, sailors taxable income. Then part 2, the net tax payable by sailors in that month. Then part B of the question says that in July that year, sailors' basic salary was raised by 4%. You have to determine the sailors' net salary in July. So let's start with part A. Part 1 of A, the taxable income. This is given by the basic salary plus allowances, and in this case the basic salary we have as the 52,000 plus allowances. We have a house allowance of 7,800, and we also have a commuter allowance of 5,000. We add the 3, we are going to get 64,800. So that is our taxable income, 64,800. Then part B, we have to get the net tax payable by sailors in that month, and in this case, of course, we are just going to make a table to be able to tax that this amount of money. So get ourselves a table there. So one side you have the taxable income, and then you have the tax on the other side. So we want to tax the 64,800. We look at our table. It is monthly taxable income. That is a very key thing because not all of them are monthly. Then it is in Kenya shillings, and then the tax rates are in shillings. They are given in percentage here. So our taxable income here, we have 64,800, and when you look at our table, we start from 1 to 11,000 all the way. This bracket is up to 42,000. Then this one is over 42,782. So meaning that I'm able to go through all the bracket because our money, our taxable income there goes beyond. It is up to that. It is in that field bracket. So the first bracket, it is from 0 to 11,180. So get 11,180 times 10%. Then to get what you're going to tax in the second bracket, we subtract these two. 21,714 minus 11,180, we get 10,594. This one multiplied by 15%. Then we get to the third bracket. We do the same. That 2,248, we subtract 21,714. We're going to find that the same value look similar to the second bracket, 10,534. This one will go by 20%. Then we go to the fourth bracket. We are going to be having now the 42,782. We subtract that 2,248, and this is going to give you 10,534. This one multiplied by 25%. Then in the fifth bracket, we are going to be taxing what is excess of this money, and that is going to be now the 64,800. We subtract 42,782, and that one is going to give us 22,018. When we subtract 64,800, we subtract 42,782, we get 22,018. This one is taxed rate is at 30%. So we are going to have that. Then just multiply. See my calculators there. This is going to be 11, 18. Then 10,594 times 15%, you get 1580.1. Then 10,594 times 20%, you get 2166.8. And then go to the fourth one. 10,594 times 25%, you get 2633.5. Lastly, get 22 to 18 times 30%, you're going to be having 6605.4. So that is the tax. And then we get now the payable tax. Payable tax is the amount that you're supposed to pay before we get the relief. So we add these 5, and then we're going to be getting as 14,043.8. Then we raise relief because you've been told that we had the personal relief of 1,280. We raise it here, less personal relief, which is 1,280. When we get the relief, we are going to be getting now the net tax, or just the income tax, or you can talk about the payee. So the net tax then we're going to be having now the difference between the two, and 14,043.8 minus 1280 should be 12,763.8. So that is our net tax that this person is going to be taxed. From there, let's answer part B of the question. We'll be told that in July that year, serious basic salary was raised by 4%. You determine the net salary. So before we get to the net salary, we need to work on this basic salary that was raised. Initially, it was 52,000, but now it was raised by 4%. So let's see how much it was raised to. So the basic salary was raised by, so the rise, the increase in basic salary would be 4% of 52,000, and this is going to be 2,080 shillings. So that is the amount that was increased in her in Sarah's salary. Then because you have increased this money, of course the tax is also going to increase. And the part that is going to be affected, it is the fifth bracket, because of course the others are not going to change. So that change, the increase in tax is going to be this difference here, that is 2080, we multiply by 30% because it is going to be on the fifth bracket. So the tax increase, can call it that, will be now 2080 times 30%. And this is going to give us 624 shillings. So that is the increase on the tax, meaning now that the new tax will be, initially the tax was 12,763.8. Now you're going to add now this 624 to get 13,387.8. So that is the new tax that is going to be levied from the CRS. Then our question is asking on the net salary or the net pay. So you know that the net pay is given by the gross income minus deductions. So in this case, gross income is basic salary plus allowances. So our basic salary now, initially we had as 52,000, but now you have addition of 2,080. So basic salary will be now 52,000 plus 2,080, and this is going to give you 54,080. So that's the new basic salary. So 54,080. We have the other allowances, we have not changed. We had house allowance of 7,800, and then the commuter allowance of 5,000. That is our gross income. Then we subtract deductions. In this case, we don't have any much deductions except the tax. So the deduction is going to be the payee, or the new tax here, which is 13,387.8. So we add the 3. So when we add the 3, we're going to get 6,800. This one is subtract 13,387.8, and then subtract the 2, we're going to get 53,429.2. That one is our net pay or net salary for what Silas received by the end of that month. So let's look at example 2. We should mark end of this subtopic. And the question reads that Mr. Mutuku is a civil servant, and his payee amount to Kenya pound 108 per month after getting a tax relief of Kenya pound 50 in the same month. So you have to calculate his total tax in Kenya shillings per annum before the relief. Then part B, you are given a table. You calculate his taxable income per annum in Kenya shillings. And lastly, in every month he gets a house allowance of 12,000, a medical allowance of 3,500, the commuter allowance of 1,200, calculate his basic salary per month. So that's our question. It's a very good question. This one we are going to start from backwards, because you have the payee. So this case you're not finding the payee, but you want to get the taxable income, and again you get the basic salary. So let's see how we go about it. Let's start with part A. You have been given the so part A. We have the pay as you earn. Payee is Kenya pound 180. Then we told that we have the personal relief. You have the tax relief of Kenya pound 50. So the relief is Kenya pound 50. So we add the 2, and then we are going to get this going to be 230 Kenya pound. So that is the so this one, when we add the 2, remember before you get to the payee, in the other way around, you usually subtract the relief. Now, so when you want to go backward, this is now the payable tax. This is the payable tax, or the tax that is supposed to pay before the relief. Then you have been told to calculate his total tax in Kenya shillings per annum before the relief. So you want to answer our question, you need to make it as Kenya shillings per annum. Remember, this is per month, and then it is in Kenya pound, and we know that 1 Kenya pound is equivalent to 20 shillings. So this one we can get 230 times 20 to make it Kenya shillings. Then from there, we are also going to multiply by 12. So now to make it per annum, 230 times 20, these are now shillings, then times 12 to make it per annum, because we need to get it as per annum, because our question requires us to do so. So when you multiply this one, you are going to find that you have 55,200. So that's the tax, payable tax is 55,200 shillings per annum, or per year. So you know what, in that year, this is the tax that this person was supposed to pay. So let's look at now number B. You have been given the table. You need to calculate the taxable income per annum in Kenya shillings. So our table looks different a bit, because we have income in Kenya pound per annum. So whatever is on this side of the table, the taxable income, it is in Kenya pound per annum. And then the rate, it is shillings per pound. So, like in this case, we have from 1 to 5,008, we have 2 shillings for every pound. So, we're going to see how to go about it. Now, so in this case, part B, we can draw the table. So, the taxable income, and we have the tax there. Then we are going to start from this down part here, where you have now the gross tax, payable tax. Payable tax, in our case, we have already gotten that as 55,200. So that is the payable tax that we have there. We want to ask ourselves, how much do we tax the taxable income here to give us the 55,200? Remember, this side is on shillings, this side is on Kenya pound. So these are shillings, but of course, whatever you get in this side here, it is in terms of pound. So we tax up to the time we are going to reach the 55,200. So in the first bracket, we are going to tax from 1 to 5808. So the maximum there is 5808 multiplied by 2, because in every pound we are going to get 2 shillings. So in this case we have 58 pounds, so we multiply by 2, and that one is going to give us 11,616. So when you look at 11,000 and then our amount here is 55,200, so we are going to go to the second bracket because we have not yet reached 55,000. So the second bracket you're going to be having 11,280 minus 5808, and that is going to give us 5472. So we multiply by 3, that is the rate on the second bracket, and this is going to give us 16, 16,416. And then we check, we add these two, it's going to give you roughly 28,000 there. We are yet to reach 55,000. So we go on to the third bracket. That bracket is going to be given by 16,752. We subtract 11,280, and this is going to be 5472. This rate we multiply by 4 shilling, so that you can be able to get 54. So that's times 4. We have 21,888. So let's add the 3 of them. You see the value that is going to give us, and this one, when you add the 3, we have 49,920. So when you check our value here, it is very close to 55,200. And if we tax everything in the next, meaning that our value here, whatever we are going to tax here, should be, it is going to be now in the fourth bracket. Our value there, or our amount of them is about, it is that bracket. So how much is there? So we are multiplied by 5. Whatever you multiply by 5, you get the difference between these two, because we cannot tax everything here because it's going to be more than 21,000, and of course the difference is not that much. So 55,200, we subtract 49,920, we are going to get us 5,280. So that is what we are going to be taxed. We are going to tax in the fourth bracket. So what have we taxed? We can give it as the value, maybe m. M multiplied by 5, you get 5280. We want to know what is that value of m. And of course, if m times 5 is over 5280, then m should be the 5280 divided by 5, and this is going to be 1,056. So this is the amount that is going to be taxed in the fourth bracket, the 1056. Then our question is to get the taxable income. So the taxable income, this is our taxable income, 58. So we tax the first bracket, the second bracket, the third bracket, and now the fourth bracket. So we add the 4 of them to get the taxable income. So taxable income will be 5808. We add 5472. We add 5472, and then we add 1056. This is going to be in Kenya pound. the total of that one is going to be 17,808. 17,808. Now, our question says that we give in Kenya shillings per annum. So you convert this one to Kenya shillings by multiplying it by 20 to get Kenya shillings 17,808 times 20, you get 356. 356 and 160. So that is the taxable income per annum, which is 356,160. So that's how you're going to answer that question B in that format. Then let's look at part C. Part C says that in every month you get a house allowance of vacation 12,000, medical allowance of 3,500, and a commuter allowance of 1,200. Calculate the basic salary per month. So remember, this is our taxable income per annum. Now we will need to get per month to answer question number C. So part C. So the taxable income, we give it per month, because in this case we had it per annum, will be now 356, 160. We divide by 12 to make it per month, and this is going to give us 29,680. So that is our taxable income in Kenya shillings per month. And how do you get the taxable income? Taxable income is given by basic salary plus allowances. So this 29,680 is going to be given by the basic salary plus allowances. We have various allowances here. The house allowance, which is 12,000, plus the medical allowance 3,500, plus commuter allowance, which is 1,200. So the 29,680 is going to be the basic salary plus these allowances. The total of the allowances is 16,700. So we want to get the basic salary, because this is how you get the taxable income as basic salary plus allowances. So the total of the allowances is 16,700, and so meaning that the basic salary will be, now we take this on the other side, should be 29,680 minus 16,700, and this is going to give you 12,980. So that is our basic salary, and it is going to be in Kenya shillings per month. So that is what Mr. Mutoko is going to be earning per month, and that's kind of question. That is how you handle them. I think just need to find more of those questions. You practice, and by the end of the day, you are going to be good to go.